Hello friends, my name is Dr. Bharath Chandra. Videos are meant for the benefit of society. Today's topic, stocks in rubber band upside when. The biggest driving factor for stocks to appreciate in the long term is the improving fundamentals of the company. As long as the company's revenues, profits, market share in sector rises, the stock should and will appreciate in the long term. However, in the short term, in spite of good fundamentals, some stocks may be laggards and the stock price may not rise much for some months or years. There are many live examples of the long periods of consolidation and then stock price rising suddenly after a point of time. Classical example is ITC profits and the stock price for the last 5 years. 2017-18 net profit of ITC was 11,271 and ITC stock price was 298. That means July 2018. 2018-19, the ITC net profit went to 12,592. ITC stock price fell to 270. 1920, 15,306 and the stock price fell down to 194. And 2020-21, 13,161 was the profit. In spite of the profit, the ITC stock did not appreciate, only appreciated to 205. 2021-22 ITC net profit went to 15,243 and ITC stock price bounced back like the way it was held in a rubber band and went up to 293. Here I would like to remind you, large number of people are asking us why the ITC is not going up, and it has now gone up approximately about 35 to 40% when compared to the last year, entirely because the net profit has been rising but the stock price was not keeping in track with it and finally got into track by reaching 293. This is the graphic description of ITC stock price overall consolidation 5 years and how there was a upside soon after the consolidation. Similarly, in many stocks at the end of the consolidation, if there are negative factors and the stock may go for what is called as negative breakout, it may start going down in an appreciable manner. So, since the fundamentals of the company were good and improving throughout the period, stock price managed to recover. If on the other hand, stock price was falling and the fundamentals also were becoming weak, then mostly the stock price would not recover or take a very long period to recover to old price. Similarly, in the last 2 to 3 years, there have been some leading companies which are going through a similar problem of underperforming in spite of good fundamentals. Some of the examples are HDFC Bank, Kotak Mahindra Bank, Dabur, HDFC, etc. Now, to give you another example, HDFC Bank profits and stock price last 5 years. 2017-18 HDFC net profit 18,510, HDFC Bank stock price 1,087. 2018 and 19 22,332 versus 1123. 2019 and 20 27,254 and 1,032. 2020 and 21 the profit went up to 31,833 and the HDFC Bank stock price 1,426. Now, classically, 2021-22 HDFC Bank net profit has crossed 38,053 and almost 25% upside in terms of the net profit. But that 25% upside is not visible in HDFC Bank stock prices because it has gone from 1426 to 1394 and the upside is not seen in the stock price. Here is the HDFC Bank stock price last 5 years. The idea is if the HDFC Bank stock price not going to reflect in terms of to the share price going up almost to the similar percentage, that means it's in a rubber band today or tomorrow it's going to bounce back. If you know fundamental analysis and technical analysis, it's almost sure that you're going to make profits from stock market. In stock markets in Canada, there is nobody who is conducting a workshop starting from A, B, C, D, and then large number of people keep asking us when is your next free webinar on our 3 months online Canada stock market course. We have organized a free webinar on 10th July Sunday 10:30 a.m. to 1 p.m. and to receive the link from this online webinar you got to send us an email successdigest@gmail.com, name, mobile number, and in the subject column please type Kannada webinar. Once you attend the webinar, you find that joining the paid workshop is beneficial for you, then you can take the decision. Now back to the matter of the video. The consolidation period may last for few months to multiple years such as 2 or 3 years. Usually the longer the consolidation, the more chance of bigger movement on upside or downside. Similarly, Nifty is also consolidating in a narrow range since the last 10 to 11 months between 15,800 and 17,800. So a big movement can be expected at the end of the consolidation either upside or downside. The reversal of a trend can be identified using candlestick in technical analysis. If purchased at such a time, then there is a chance of 3x to 5x appreciation in the next few years due to the long consolidation previously. This is an example of why stocks don't go up continuously. There will always be periods of consolidation or stagnation or weakness. The stock price will definitely rise after consolidation if the fundamentals of the company are good. The stock price is not in our control, but selecting the companies which are fundamentally strong and also monitoring them regularly is totally in our control. You will observe this even in the future too, when some stocks you hold may be lagging behind other stocks in spite of good fundamentals. As long as the fundamentals stay good, you may decide to hold it if you are confident of the potential in the business. Finally, at the end of this video, we have a question for you. Do you hold any stock whose fundamentals are good but the price is stagnant for many months? If yes, type the name of the company. If you are not the member of Stock Market Academy channel, this is the time to subscribe, press the bell icon, send this video to large number of your friends. Video is good, press the like button. Thank you for watching the whole video. Bye bye, all the best.